It gives me great pleasure to introduce our Commissioner of the Department of Environmental Protection, Rohit Aggarwala. And I also have had the pleasure of knowing Rohit for quite some time. We had an adventure together in a helicopter in Bahia, Brazil, where we were going in the middle of fog. Do you remember fog banks, right? We were trying to sort of come down in the middle of these sustainable cocoa communities on a little hill that nobody could see, but somehow we were going to arrive there, and we did. And we had a fabulous time meeting with these sustainable cocoa producers. This was while Rohit was working for Mayor Bloomberg, when the mayor was leading the C40 effort, working with the largest cities around the world to help them be more sustainable. And we were down there doing that visit. So Rohit led the development of the Office of Long-Term Planning and Sustainability for the Bloomberg administration. It was really the first major sustainability office in New York ever. And then prior to that, he had founded the environmental grant making at Bloomberg Philanthropies. And he also was a co-founder of Sidewalk Labs. So we're really thrilled to have him back with us at DEP with that lovely, huge organization. And we're thrilled to have him talk to us today about his role, both managing DEP, but also he is our Chief Climate Officer in New York City. So to talk a bit about the work and focus on climate and climate finance in New York City. Rohit, pleasure to have you here.
Thanks, Nancy. And yeah, I often think about how sustainable it was to be in a helicopter in the rainforest, but you know, we all have our moments of cognitive dissonance. But thank you, and it's so good to be here after about a year back in government. It's very nice to be in a room of people in the private sector. One of the things I've cherished about my career is the ability to go back and forth and have impact in both. And I think one can bring a lot of value to both sides from bringing that perspective. And kind of that idea of going back and forth, I'm doing every day because, as Tansi suggested, I actually have two titles right now in New York City government. One is a policy title as Chief Climate Officer with a citywide mandate, and the other is as Commissioner of DEP, which, for those of you who don't know, DEP is your water company. So if you took a shower, took a drink, or used the bathroom today, you're welcome. I hope it was good for you. I can vouch for the fact the quality was great, no matter what your experience personally. But what's great about that is that it is a deeply operational task, right? Because quite literally, and I like to remind the people who work at DEP, there is only one city agency that every New Yorker is intimate with by 8 a.m., right? And that is the water, right? And people will notice, and this morning there was rain last night, so I woke up to a barrage of phone calls about flooding on the FDR and flooding near the Throgsneck Bridge and things like that. And what it reflects is a recognition by Mayor Adams that I think should resonate with all of you, and in fact leads into, I know, the topic of the next panel, which is about the difference between commitments and what it actually takes to deliver them. Because for 15 years, and as Tansi suggested, I helped start that under Mayor Bloomberg, New York has been making climate commitments. And I'd argue that now the era of commitments is really over. The era of implementation is upon us. And so what I really value about what I'm doing right now is the fact that on a daily basis, I'm thinking about policy, but I'm also actually able to make and influence operating decisions that are informed by climate change. And to a certain extent, that is what sustainable business is all about. I thought it was a fascinating conversation just now because, of course, what auditing does is it also leads numbers to translate into daily and quarterly operating decisions. And that's what government agencies need to do. That's what businesses need to do. And it reflects the fact that, of course, under Mayor Adams, one of his great catchphrases is GSD, get stuff done. It is something we think about on a regular basis. And again, I think it's particularly important in the world of climate change. And it informs what we are doing in New York City government. We are not looking to make big, bold new promises because there's an overhang of promises that have not yet been delivered. And so we are focused on the nuts and bolts of how we actually get that stuff done. Many of you know that in 2019, New York City passed landmark legislation, Local Law 97, to require the greening of New York City's buildings. It's called the Climate Mobilization Act. It is going to be a massive, tens of billions of dollars, decade-long effort to get this law implemented, to realize that mobilization that it requires. And frankly, I think many of the people who wrote it didn't appreciate just how difficult it is going to be, but we are grabbing that bull by the horns, and we are working on all of the difficulty. Because as you know, if you've ever run a big operation, if you've ever had to think about how to renovate a building, if you've ever renovated your kitchen, you understand the nuts and bolts of how you get things like that implemented are difficult, and they take time. And they lead to bizarre things that you had not appreciated were going to be a problem around permitting or insurance or labor supply or all sorts of challenges. But that's what we're going to have to do to get greening done in New York City. Similarly, we have to lead by example. It's something that Mayor Adams often reminds us, that New York City government has to do everything first before it tells the private sector that it's going to do that. And so we're working aggressively on greening our fleet of vehicles. We are working aggressively on greening our city buildings. My own agency at DEP, I operate 14 wastewater treatment plants. Part of the wastewater treatment process is digesting solid waste. That's great for the environment, but it does produce methane, and one of the things we've been doing is a thorough evaluation of all the places where we have leaks of methane, which, as you know, it's a potent greenhouse gas, and it's everywhere from big problems like cracks in tanks that are going to cause tens of millions of dollars to fix, all the way down to leaky connections on pipes that we could wrap in some plumber's tape and solve the problem. I literally have a punch list of 1,000 repairs that we are going to be doing over the next several years to reduce DEP's greenhouse gas emissions through its leaking methane. And then there's arguably the biggest challenge of all among city properties, which is NYCHA. NYCHA is the nation's second largest landlord. Many of you know how difficult a challenge it is even to keep NYCHA running and keep its buildings habitable. But it represents a huge opportunity for greening, and NYCHA, to their credit, has done great work in getting ahead of both resilience. I think one of the unsung successes of the post-Sandy work in New York City has been making NYCHA complexes resilient in the face of future potential flooding events, but also in greening them. And we actually have a program right now that has developed a custom-built heat pump that will provide heating and cooling through the window in NYCHA apartments, and there are 50,000 units where we could apply that. And that's the kind of play that could allow you to get to scale very quickly by leveraging the city's scale. It's not just greening buildings, though. We have a role to play in the energy transition, and there too, there's a lot of nuts and bolts that has to happen. As New York State, as the federal government is making big commitments around offshore wind and bringing solar and hydropower down from the north, and New York City played a big role in getting a contract done that is going to bring a major transmission line from Canada with hydropower down to the city. What we're going to spend the next several years doing is figuring out where all those cables are going to go. How do you actually connect all those offshore wind farms into the city's grid without tearing up neighborhoods, without exacerbating the environmental injustices that we know we also need to solve? And that even doesn't begin to touch on the challenges we face in terms of resilience, where, of course, there's been a ton of work, more than $10 billion spent on resilience in New York City since Hurricane Sandy 10 years ago, but so much more that we have to do to turn a collection of existing projects into a citywide approach and a standard that has legs. Because as I have said I've told our city council, the reality is all of us, and I'll take issue with something Jillian said a moment ago. Yes, I'm sure you could all have a lifetime of careers in green audit. Making cities resilient is also going to be a life's work. We are going to be doing this for decades. And every now and then I have somebody say to me, well, when is New York City going to be resilient? When are we going to be done with that? And it's like asking, well, when are we going to be done with education? Right? When do we no longer need health care? Right? It's broken if we still need it. No, unfortunately, the reality is we're going to need to chase this goal for the rest of our lives because the climate is changing that fast. And that leads into, even though I'm spiritually one of you, I like to think, as a government official, what do I have to say to you? What help do I need from you all in the private sector and the great community that Tansy and this center has put together? There's a number of things. We're all celebrating, I assume you are as well, the vast impact that the Bipartisan Infrastructure Law and the Inflation Reduction Act are going to have. But I can tell you, as we see those two pieces of legislation implemented, they are going to demonstrate the creakiness of our government institutions. For years, we've said, well, there's not enough money, and that's been our excuse. Now that there is enough money, we're going to see that money wasn't the only problem, that we have problems with procurement, that we have problems with staffing, that we have problems with the funding formulas. And it's not just red states where they're going to use funding formulas to give less money to the cities. Even here in New York, the money that New York State gives away, much of that federal money has to be channeled through New York State. And the funding formulas that are used give a lot less money on a per capita basis to residents of New York City than to residents of small towns upstate. We're going to face those problems as those two laws get implemented. There's an opportunity for the private sector and for the nonprofit sector to help. We need help on the stuff we're already doing. One of the things having been in the private sector, it's a lot of fun to think up new things for government to do and then present it to them as though they should be excited about this. Trust me, I've got a to-do list. So I urge you, approach government like you would any other client. Figure out how you can use your tools, your distinctive capabilities, to solve the problems I am currently trying to solve. I gave you a list. I'm happy to talk about any solutions that you can think of on all of those. But two that really come to mind and two that I hope our next panel can talk about is around mobilizing capital to pressure the recalcitrant. There are so many people who want to stop climate progress. It isn't just something going on in red states. Right? Whether it's people who own buildings and don't want to be bothered to do the work, whether it's people who enjoy the fact they can still drive into Manhattan for free and they don't have to pay for congestion pricing, whether it's people who think it's a bother to have to separate their trash, let alone put out their organics separately. There are lots of people even here who want to slow us down. Often their excuse is it's too expensive. Anything you can do to make it clear that not only is it not too expensive, but that your funders, your bankers, your mortgage lenders, whoever it is, want you to do this, will be helpful. The second I would say is scale. We've spent 15 years doing pilots. We can't do any more pilots. If you come to me with something, I get good, I thank you, sir. I get good ideas all the time. And they come up with numbers that have 4 zeros behind them, or 5 zeros behind them. New York City has nearly 9 million people. That has 6 zeros behind it. So if you don't show up with at least 6 zeros, it's not worth my time, right? And it's not going to have measurable impact. And I think that's what everybody here is interested in, is measurable impact. So help us solve the problems. Help us get the recalcitrant to move by changing the financial equations, and help us get to scale. Because as I have seen, and I'll say one more word on scale, the challenges of standardization and origination costs and diligence costs have been the death knell of many good ideas. And so we have to figure out, how do we create the kind of repetition, the kind of scale that you get in mortgage lending, that you get in stockbroking, and that you get in all of these things where you have numbers with 6, 8, 9, 10 zeros behind them in a day's work. And that's what cities are, because cities are big, and as the song says, if you can make it here, you can make it anywhere. And so I encourage you to think about whatever great ideas you're working on, think about starting it here in New York, because we could be a great platform. It's got to go big, it's got to go fast. And with that, I think I turn it over to somebody to actually introduce our next panel. But thank you very much.
Thank you so much. Thank you for the shower this morning. As many of us are native New Yorkers, and it's wonderful to know that we have strong leadership protecting our city. So up next for our final panel of the day, we are going to be turning our attention to how to achieve these ambitious goals that we've been talking about, and to the commissioner's point, how to get access to capital for companies. So our next panel is going to discuss the state of climate finance and the different mechanisms available to fund the low carbon transition. To moderate the panel, I'm pleased to welcome Kenza Bryan, who's the moral money reporter at Financial Times.
Hi everyone. Nice to meet some of you at dinner last night. Is this mic working okay? Yeah, great. So I'll start by introducing our panel. You can see them all up here. So Andrew Kessler, president of the New York Green Bank. Hopefully you can expand on some of what we just heard.
I can. That was the best lead up ever. It really touched on a lot of what we do every day, which is scale, replication, and really animating financial markets. So hopefully we'll have a lot more to say about that. But I'm the president of New York Green Bank. We're a $1 billion state-sponsored fund. We're a division of NYSERDA, and hopefully we'll have a chance over the next few minutes to get into a little bit more detail about what we do.
Thank you so much. And Lindsay, Luger, you're also in the spotlight today, and you have been over the weekend, in at least your entire sector. You're the co-founder of Energy Impact Partners, the VC that primarily backs climate tech and energy companies. And then Priscilla Liu, head of Sustainable Investments Asia at DWS. I know you have tons of interesting thoughts about the investment landscape currently in Asia, because you gave us some of them last night. So look forward to hearing more about that. I work with Gillian Tett and with Patrick Temple-West, who you might have heard earlier, basically covering green finance and stakeholder capitalism more widely. So this is everything that's been going on today is right up our street. I'm usually based in London, but either side of the Atlantic, I think the key takeaway that I've kind of learned in my first year on the job is not to get too bogged down by numbers. So where I'm from, everyone is tearing their hair out about the Inflation Reduction Act, and we've got a real inferiority complex going on at the moment in the EU about this dratted $370 billion that we mention in every conference and in every piece of copy. But then I fly over here, and then the first thing I hear is that Biden's approved an $8 billion Alaskan oil project, which just in one project wipes out about kind of 2% of that value that's supposedly going towards climate finance. And I'm like, okay, what's going on here? How do we get a sense of perspective? And there's someone we've written about quite a lot, Mark Carney, a former governor of the UK Central Bank, also head of the world's biggest climate finance alliance, GFANZ. And he always puts forward, when he talks to British parliamentarians, a ratio that helps us put all of these numbers in perspective, a lodestar that the whole climate finance movement should be working towards. Their perspective is 4 to 1. For every dollar invested in old tech and in fossil fuels, we're going to need $4 by 2030 invested in clean energy and other kind of renewable tech-themed things. Currently, we're at less than 1 to 1, I think, so there's a long way to go. But the point of that is that we're interested in, and particularly today, in the broad trends, the political incentives, the investment incentives that can drive this, so that in 10 years' time, we won't be counting billions of dollars, there'll be enough cash for the green economy. So without further ado, I'd like to just ask you, Lindsay, how was your weekend? Give us a bit of an insight into the kind of crisis management of the past couple of days, how you've been approaching that.
So it was super chill. I had some cocktails. And I also had the pleasure of actually teaching my 3 daughters about the banking industry, because every call they heard me on was obviously about the banking world. So at EIP, we're a climate tech investment fund. And what's different about us is that a lot of our LPs are actually very large strategics. And so very large electric and gas utilities, big companies that want to decarbonize, so Microsoft and Amazon and big REITs. And so that informs a lot of our investment decisions. And so we've been really fortunate over the last few years to have invested in a lot of companies. And we currently have about 75 companies in our portfolio. And And a very large percent of them obviously had significant capital at this bank that imploded this weekend. One of the things that I think is really interesting and, frankly was underappreciated, I think, is that the way that these loans are set up, so SVB typically lends companies money. They're one of the only banks willing to lend to the venture world. And the covenants that they put in their loan docs are that all of your cash has to then be sitting at SVB. And so it basically created this circumstance where it wasn't like all of our portfolio companies were well diversified. It's like either they had all their cash at SVB or none of their cash there, which obviously I think is in part what led to a lot of the panic leading up to the weekend. And so basically what ended up happening was some of our companies pulled out their money. Some of them left it because of these covenants that they had out. So there was a lot of panic, obviously, like literally how are we going to make payroll on Tuesday? Now I think the interesting question, though, that is sitting for a bunch of our companies is those who don't have any loans with SVB are, more or less somewhere else. But for those that do, what do? Because they don't want to break the covenants on their loans. They actually need those loans. And so they're sitting there in this weird position of trying to decide, do I take out all the capital, risk breaching my loan docs and having to repay this, or do I leave it there? So that's the current state of the big question, I think, on a lot of companies' minds right now.
Can I ask, Lindsay, do you regret not having warned some of the companies in your flock about this particular clause? Do you feel that you could have spotted that earlier?
So, look, hindsight's always 20/20, but I think the reality is there's nothing we could do about it because lots of our companies actually tried to negotiate away that clause. But SVB was the largest lender to this space. They offer very competitive terms. And so there wasn't much room for negotiation. So even if some of them had known, the ones that did tried, and there wasn't anything to do.
Yeah, that's interesting. Yeah, because there's a wider structural problem here. Who's going to lend to the riskiest companies that could potentially save the world, but in like 10 years' time? And in fact, this is something we've been thinking about. We've been talking to other people about. I wonder whether you think this will shift the investment landscape and whether some of the big players are going to starting these conversations with the smaller tech companies.
So I certainly hope so. That would definitely be our preferred outcome. Look, there's other lenders in the space. And I do know that there are other bigger banks that have long wanted to attract these tech companies into their banks at earlier stages because obviously the ones that are successful go on to IPO and become massive companies. So I am hopeful that some of the larger institutions will see an opportunity and will step in and start to lend. That being said, though, just to address the broader question, I don't think that this is a major threat to venture investing in climate tech broadly. There's actually a ton of reason to be very optimistic about venture investing broadly. The debt piece is just a small component of the actual capital stack of these businesses.
Yes. Okay, thanks so much for that. That felt like a bit of a frontline seat.
Well, it feels like the only question to ask someone in venture right now.
Yeah,
So.
let's now broaden right out. And I'd like to ask all of you, starting with Priscilla, what you think is the most exciting piece in climate finance right now? Because we're no longer just in the age where you can just pick a thematic fund and track just biodiversity or water or just make little tweaks to the index. We're constantly hearing about debt for nature swaps, sustainability-linked bonds, quite sophisticated financial instruments. Where do you think the most exciting ones are at the moment?
I think that the critical piece here is really how do you scale? And as asset managers, for those who know the statistics, the global asset under management is over 108 trillion. And so if you think about where is the capital going to come from to really make a difference, then those asset managers that really could have an impact and could drive change and channel capital towards making a difference in climate change, in the environment, in all of the aspects of ESG's goals and targets and KPIs, we as asset management really have a responsibility to drive those KPIs and drive transition and change. And I think that that's really the challenge. How do we move capital? And how do we move capital in a way that has meaningful, impactful, measurable, quantifiable measures in terms of progress?
And are there any particular instruments or types of climate finance? How do we scale? What are the tools you're going to use to get there?
So what we're already seeing, which is hard to believe, but we started investing in the space in renewable energy, focusing very much on neutralizing energy-related carbon footprint or megawatt hours of fossil fuel that we can neutralize, specifically in China, helping to green supply chains for corporates back in 2018. And back then, and it seemed like not that long ago, it was kind of a very new thing. And over the last few years, it's really changed. People have become more aware. And I think that awareness has made the difference. But what's really going to drive this is really top-down policies, which some of it is happening in the US. A lot of it is also happening in China, which is not quite visible and actually widely, I would say, being promoted by the media in China. But the government plays a significant role in driving policies to encourage corporates, institutions to actually move in the right direction, either by incentives like IRA or by penalties, which is tax.
Just to pick you up there, can you briefly tell us what we've been missing about the green finance story in China?
Well, so basically, the government has been really encouraging the banks to provide green financing, which is different than just regular loans. And it's different than green bonds, which is really supporting infrastructure development and financing infrastructure development that makes a difference in reducing pollution as well as renewable energy. And so that they gave quotas to each of the banks. And that doesn't happen.
Yeah, I mean, that's a step up from the IRA.
Right, exactly. Because if every bank is required to have certain percentage of the loans be focused and only used for financing green infrastructure, whether it's renewable waste treatment, toxic hazardous waste treatment, greenhouse gas emission, and so on, then it would actually drive. And so it really requires both top-down regulations, the really, I would say, the requirement to actually move capital towards making a difference.
Right, a much more forceful approach. Thanks for that.
Right.
Can you briefly tell us what's going to excite you most in the next year when it comes to climate finance?
So New York Green Bank, we're in the business of gap filling, so identifying and closing financing gaps that are holding back the renewable sectors and other technologies. What's most exciting right now is really leveraging the success that we've had in other asset classes into some of the newer ones that are coming online right now. So battery storage, for example. Really exciting innovations taking place now that provide the capital necessary to create the return profiles that equity sponsors then find attractive. Clean energy, whether that's charging infrastructure or fleet conversions, the green hydrogen. There's a lot of really interesting business models, technologies coming online now that are not well debt financed. And as you drive more leverage into these businesses in ways that in structures that are replicable and can be scaled, that's really where it gets exciting, because there's no way state, federal, government capital is going to provide the necessary capital to make the necessary investments to drive the energy transition. So we have to animate private markets, and that's what we do every day at New York Green Bank.
And what about you, Lindsay? Of all the innovations you see, which one gets you most fired up?
So for starters, I just want to suggest that you guys might want to step in and take over SVB's role for the whole country. Just nationalize. So what am I most excited about? I mean, first of all, I'm very excited about climate tech, broadly speaking, because it is a tremendously opportunity-rich environment right now. I think somebody earlier was talking about the talent pool. I mean, we have seen a tremendous flight of talent into the climate tech space from all of the other areas of technology. And we actually did this analysis recently, and we found that in 2021, over 14,000 companies received over $1 million of venture funding in climate tech. That compares to less than 1,000 just a few years earlier. And so the number of companies that are being born and that are being funded is increasing significantly. The other really important thing is that there's a ton of capital now in the space. And so last year was a record year for fundraising. It was a record year for deployment. There's a huge risk-reward spectrum in venture now, which is also really amazing for investors. So we're now at a point in the venture industry where you could go super early stage, huge tech risk, huge upside. Like you could literally invest in nuclear fusion right now. On the other end of the spectrum, there's now a lot of companies that are really at this more mature phase where growth equity can start to come in. And there's a range of technologies. So you have hardware, you have software, you have new business models. And so it's a moment in time where there really is something for almost any venture tech investor.
Right, to dip their feet into or to go wholesale.
Exactly.
Yeah. I'd also like to hear just briefly what you think the biggest challenge facing climate finance is right now. I feel like we've already covered you.
I'm done.
Andrew, what do you reckon?
You know, obviously, we're seeing some headwinds even before the recent issues with the financial sector, inflation, obviously driving the cost of projects, cost of labor, supply side issues that really started from COVID and persist. There's disruptions, obviously, on a global basis with respect to what's happening in the Ukraine. You know, there are a number of issues that, you know, present headwinds that we've been dealing with every day for the last, 12, 18 months. They're not new, but they exist. And so you work around them, you structure around them, you create flexibility in your in the loan products to be able to enable folks to have the breathing room to still proceed with project development. But those are some of the headwinds. Some of the tailwinds are, for example, the IRA, which is going to, which injects a number of new features into these businesses that create value, whether it's with respect to tax credits and other economic elements to just pure capital itself. So those are important elements that I think hopefully we'll be able to leverage going forward to mitigate these issues.
Priscilla, what can you tell us about the challenges you're seeing? And I'd be interested in things that aren't just macro, stuff that really affects your particular part of the industry.
So when you look at it, certainly the available capital is critical. And now we're seeing that corporates are participating fairly significantly in the investment of renewable energy, and more so with IRA. But what we're going to find is that there are going to be choke points with respect to permits being available and projects being available at scale. And I don't mean small little projects. I mean mega projects where you're talking about 50 to 100 megawatts of wind, and then being able to build gigawatts and gigawatts of wind and solar. And when you look at that, you not only have the permit issue, you've got the backhaul transmission issue, which is the ability to actually bring all of that power to where the power is needed. And that's where the investment over years have actually made a difference for China. So it isn't something that just money being available is going to happen. You've got a whole set of mega infrastructure that has to be available. You can't just do storage and be able to store energy in the middle of the desert and be able to take the solar, and then how do you transmit it to Los Angeles? And it is really a fairly complex issue that has long-term investments. And if you look at what China has done over the last decade, they've invested over the last 7 or 8 years, every year consistently, over 100 billion in renewable energy related, specifically in upgrading the transmission, backhaul transmission for ultra-high voltage interconnect, and also upgrading the grid to be smart grid. That's a huge amount of investment. And it's not something that can happen overnight. It's going to be a major challenge if we want scale to make a difference in lowering basically the dependency and consumption of fossil fuel related energy. Then there's a lot more that has to be put in place in terms of the underlying infrastructure besides making capital available.
Yeah, so what strikes me from both your answers is it's not investor interest that's the problem, it's the real economy and the constraints posed by the real economy that seem to be the problem.
And the speed at which you can catch up and actually do what could have been done over the years in building out that infrastructure to support basically the uptake of the fluctuating renewable energy power.
Yeah, did you have any thoughts on that?
I was just going to say, I think that there is this major issue with infrastructure, and transmission is a great example of that. It's also where technology comes in, because one solution is try to build out massive infrastructure. The other solution is try to do it more efficiently, more effectively. And so, for example, in our funds, we haven't actually made an investment yet in next generation transmission technology, but we're looking at a ton of different options. So it's just really important. I think this is why I think the tech piece is a really important foundational element to this whole conversation, because if we can make things better, cheaper, faster, you need less of it, basically.
Yeah.
Andrew, can you give us a bit of an insight into how companies and investors can partner with people like the New York Green Bank or other bodies to try and get what they need?
Yeah, sure. So, it is a pretty straightforward process to propose into New York Green Bank. We have an open portal. Eligibility are pretty clear. We're state-sponsored funding. We're a $1 billion fund. So we're dedicated to driving clean energy transition in New York State. We are debt finance oriented, really project finance oriented lenders, and that's really because we think that that's where the largest gaps persist. And by injecting leverage into the capital stack, you can start to drive the equity return profile and crowd in other players and other actors in the marketplace.
And to take a step back there, is that the kind of model that we would need, across every city in the world, this public-private finance?
Yeah, there's no one-size-fits-all approach, but that is an important element that I think could play an important role virtually anywhere across the United States. And you are seeing more green banks, getting stood up. And starting to animate, markets in their geographies. The IRA calls for the Greenhouse Gas Reduction Fund, which is a $27 billion funding pathway that are going to, among other things, inject capital into other green banks and similar impact-oriented investors to play an important role in the ecosystem.
Great. I have quite a few more questions, but I just wanted to open up to the audience just to kind of gauge how many you guys have got. Yeah, let's, whoever wants to go first.
So you guys are mainly talking about debt, but every 500 megawatt project requires somewhere between $100 and $150 million of equity. Equity is much harder to come by than debt. India will raise the entire rupees debt through a bank consortium for any 500 megawatt project mandated by the government. But each of those projects needs $100 to $150 million of equity to get access any of that debt. That's going to be the conundrum. That's the conundrum right now.
Priscilla, what do you make of that?
So I actually do private equity. I don't do debt for the funds that I manage for our Sustainable Investment Group for DWS for Asia. And so what we've been doing is working with corporates, where the corporations are looking to actually neutralize their carbon footprint. And in doing so, they're looking for opportunities to invest in renewable energy where the green power could actually, that's generated by the projects, could neutralize the megawatt hours of fossil fuel, their carbon footprint. And so very much so, we're harnessing the capital from the corporates, focusing on neutralizing the carbon footprint and giving them a return on the investment, equity, and then being able to get leverage on the equity from the loans, because the loans are at a lower rate than the IRR of the projects. And so as a result, you actually get a bump on the return on investment. So it's a very attractive model, and it's a very attractive proposition with respect to the corporates. They get financial return. They don't pay to buy carbon credits or renewable energy credits. They get it from the entitlement due to their ownership. It has additionality because you're putting capital to use to transition the change away from fossil fuel. So it's a very impactful, measurable, and very quantifiable and auditable trail. And that's what we do. So from that viewpoint, we are accruing capital for equity specifically.
Any other questions?
Hi, my name's Joanna Smith. I have a question for Andrew. Just curious why a state-funded investment fund is pushing solutions like quote-unquote green hydrogen, which go against our state-mandated CLCPA. It's an exciting yet untested solution, and it was made pretty clear by the voters of New York that we're not into those. We don't have time for those, and that's what the CLCPA is about. So I'm just curious if your fund has, I know you're connected to NYSERDA, why are you pushing false solutions?
Yeah, we are. We're a division of NYSERDA, and NYSERDA is standing up the Green Hydrogen Hub.
Just tell us what ICERTA is.
Sure, it's the New York State Energy and Research Development Authority.
Great.
And, NYSERDA is standing up the Clean Energy Hub in compliance with the CLCPA as well as other state policies and laws. We can certainly talk offline. I know there's some differences of opinion. Well, I just did. It is compliant with CLCPA, so we have a fundamental disagreement.
Let's just take 2 minutes to go. Give us some of the context around that question. I think it's really interesting, and then we can move on to another one.
So the New York Green Bank is not a policy-making entity,
Yeah.
so I'm not prepared to debate the particular policy-oriented matters associated with any particular technology or New York State role within those. What we do at New York Green Bank is execute into what we're asked to with respect to eligible technology. So I'm very prepared and excited to talk to you about how we animate private markets within these eligible technologies. But as far as debating, whether those technologies should be eligible and should not be eligible, that's a conversation that we can have with other members of New York State policymaking.
This is just a stab in the dark, and you might not have any thoughts, but green hydrogen, full solution, what do you think?
Yeah, we have a whole research team at EIP who digs in deep on topics like this. And
Sure.
so I personally don't have a strong view.
So there is a lot of activities. Hydrogen is basically the energy for all countries that are focusing on energy security. And so there is a lot of projects and also real projects being done in China using hydrogen as storage for specifically harnessing wind power at night. And so it's a combination of being near the rivers where they can actually utilize the water and being able to create hydrogen from the water without having to transport the water, and then be able to capture the energy at night so that they can use it, and then during the day it generates power to address peak power use. But it's very specific right now. If you want it to be economically viable, it has to be very narrowly focused because we're not there in terms of the economics and the viability of it.
Right. Yeah, and I'm sorry we can't give a kind of better overview of that, but we can all go away and read about green hydrogen. We know it's pretty controversial. Let's have another question over there.
Thanks. This is also a question for Andrew, and I didn't mean for this to be such a softball, but I'm really interested in the work of the Green Bank, and I'm just wondering if you could maybe give us an example of a project that you've seen through its life cycle that has become profitable, because I know that's part of the mission of the bank is to actually turn a profit.
Well, we've been self-sustaining since 2017. So, we make market-based investments. That's really important to point out. And the reason for that is you're not going to crowd in private sector capital if you're doing transactions that, the lending community, the private sector community would view as unattractive and unprofitable. So, what we do is we create precedent. And by creating that precedent and showing that these transactions work, they work for a lender at structures that make sense to a lender, at pricing that makes sense for the risk. People will see that and say, you know what? There's some deal flow going on right there. What are those guys doing? Maybe we should find out. And we get calls, we share, we collaborate, we bring them into our transactions on a pari passu basis. Next thing you know, we're getting involved in their transactions, helping them and their deal teams diligence an area or a business model or a technology or an approach that they're a little bit less familiar with. And pretty soon, you've got some real market animation taking place. A good example of that is community solar. 3 or 4 years ago, no one really knew how to think about that. How do you price that? How do you structure that? And today, we've got one of the most robust community solar markets in the United States here in New York State.
Thanks for that. Time for one final question. Yeah, over here, if you don't mind coming all the way back down.
Thank you. I'm trying to think of a delicate way to phrase this question. So I was able to go to COP15, and it was Kunming in Montreal, and we heard from the Chinese delegation who had some really, really great things to say about the way that top-down regulation and policy has been a big driver in their innovation. And I wish that we had that kind of political will in this country towards clean energy, but I don't think we do. So For the people in this space, how, and Priscilla, I would love to kind of hear you give this advice and then you kind of just organically come up with something. How, knowing these limitations, can you collaborate within the private sector in this space to kind of be an antidote for some of that political will that we don't yet have at this point?
Private sector.
Yeah, so the reason I point out the asset management globally has 108 trillion, which is that's the size of a global GDP, is just slightly over 103 trillion as of 2022, is that if you look at that pool of capital and you look at corporates and the market capitalization of the top 100 listed corporates in the world is like 120 trillion. So between the top 100 companies in terms of their market cap, in terms of the asset under management, you're talking about over 200 trillion of capital. And I'm not to say that they have to all participate, but if those capital are being moved in the right direction by incentives, which we're trying to do with IRA, but more importantly, incentives that is facilitated by the government to ensure that all the hurdles with permits and connection with developers and projects and green infrastructure is facilitated by the government, which is something that the government can do because they do have the bird's eye view of what's available, where the bottlenecks are for the different states. That would help facilitate movement of capital from private into the various projects that need to be funded. And that, I think, is something U.S. can do because there is right now at least the focus and the interest to actually move in that direction. But I believe that private capital is a way for you to really draw down on the available financing as well, equity as well as loans that could be made available.
Any final thoughts on private sector collaborations, very briefly?
Yeah, I mean, one other thing I'll say is that I agree that government can play a huge role, but I also agree that it's not where it is today for the most part. I think there's also a responsibility for every single one of us because if you listen to some of the earlier panels, a lot of the conversation and a lot of the way that the corporates actually move is by stakeholder influence. And so if you think about buildings, for example, a lot of building owners are starting to make changes in their building, not just because of regulation, but because their tenants are demanding it from them. And a lot of, we looked at that sustainability data for consumer products, right? So I think all of us, as much as we could sit around and blame the government and wait for the government, there's little ways that we could all contribute ultimately to making big corporations who control a lot of capital actually start to change the way they're doing business.
I think we're going to have to wrap up. I think I don't want to be responsible for us running late.
Yeah.
Thank you.
I agree with that 100%. The bottom up, I've always said we should have on each product, like the calories, the carbon footprint.
Yeah, that's a great idea. Thank you so much, all three of you.